The OGA is also a major funder of the Oregon Angel Fund. How many folks here are familiar with the Oregon Angel Fund? Good. So they've been doing great work, and the OGA pretty much matches 50% of the total O fund. So for every year, it's about, I believe it's about $1.5 million right now, and the total OGA is about it's about $3 million a year. So I think that's a really good example of a public-private partnership. The Portland Seed Fund, which just started last year in Portland, again, the partnership between the OGA, the PDC, Hillsborough, OEN, it's all these groups came together and realized where they were funding gaps and provided seed capital for that. And I think that's a really good example of a private-public partnership, because I do believe the state has a role to play in this as well, encouraging this kind of funding. Like I said, my funding came from a lot of investors. I had a few major investors who could write big checks, a lot from out of state, and then a lot of smaller investors. The one thing about angels, keep them informed. If you take money from angels, I did this. I would send out initially monthly updates, then quarterly updates, and once every 6 months. And it always amazed me how many of my investors would get back to me and thank me and say, you know what, a lot of the times they've invested and they never hear from them except maybe once a year or when they come back for the next raise. So don't reach out to your investors only when you need money. Reach out to them, keep them updated. It makes it a lot easier to raise money the next time around. The more you communicate, the better. And we did. We communicated a lot. We used to have meetings for our investors once every 6 months, which was well attended. And it worked out. Luckily for me, like I said, the business worked out according to plan. A lot of things could go wrong, but in my case, it all worked out for the best. The next form of financing, equity-based, is venture capital. Again, with venture capital, your interests are aligned because they take a bigger stake in your company than angels traditionally do. They are willing to swing for the fences, so again, it depends what kind of business you want to start and grow. They are willing to swing, so they are willing to take big risks, because at the end of the day, they need to provide returns back to their investors as well. So they will take risks. They do take an active interest in the business, which could be a good or a bad thing. If you're a first-time rookie, it definitely helps. There was a Harvard Business School study done in 2010, in last year, which found that VCs definitely do provide value add outside of capital when the entrepreneur is a rookie. They definitely provide a lot of, but if you're a serial entrepreneur, not that much. The value add outside of capital wasn't really that much. At the same time, one caveat to keep in mind is that a lot of venture funding goes towards technology-oriented companies. A big chunk of it, 81%, again, this is data from Scott Shane's book, 81% of all VC dollars in the past 15 years have gone to technology-focused companies. So whether that be computer hardware, software, communication, biotech. And 72% of all the companies founded have been technology-oriented companies. So if you're running a technology company, you've got a higher chance. It's just a very small percentage of funding which goes to VC funding, which goes to non-technology companies. And a big part of that is all about scalability, how fast you can scale the business and provide some liquidity. Again, over here, there are very few venture capitalists in Oregon. There are very few VC-based funds. I don't know the exact number, but I would say it's about half a dozen. And also, the ones that exist too, they're relatively smaller funds compared to the funds in the Bay Area or in Seattle, on Massachusetts, on the West Coast. Therefore, they can't do too many deals, or neither can they do bigger deals. So you always have to bring in outside capital, from the out of state. So taking a look at that and the fact that there haven't been any big liquidity events, I think is one of the big obstacles in Oregon. The last IPO we've had in Oregon was 2004. I believe it was Cascade Microtech was the last IPO. And they've been but we also haven't seen any big M&A transactions, because most VC-based liquidity events now is more M&A-based than IPOs. But even those in Oregon, they've been I don't believe there have been any over $500 million in the past 10 years. I think the last was WebTrend some time ago. So it's hard. And I think a big part of this, again, the same Harvard Business School study found that serial entrepreneurs provide better returns for VCs. And the problem is we don't have many serial entrepreneurs in Oregon because we don't have enough access to capital. So it's this vicious circle which we need to break out of. Why haven't we had more lucrative exits? There are plenty of theories about it. A lot of people say we're a flyover state and money hasn't been invested. I think a big part of this, and this ties in with, I think, part of this series, this year's talks, is a university system. We need a much stronger education system. We need a much stronger university system in Oregon. Because when you take a look at it, 60% of all VC dollars go to California and Massachusetts. 60%. And both those states have strong university systems. Washington's another example. People always talk about Oregon being a flyover state, between the Bay Area and Seattle, and people don't stop over here. Washington is 5th in terms of VC dollars raised. It's California, Massachusetts, New York, Texas. Texas is number 4. And then Washington. Oregon ranks, I believe, 21st in terms of VC dollars invested. And again, when you take a look at all those 4 states, what they've got is good university systems. And it's just not over here, right? Because I've got some experience with India, and I'm assuming a lot of people here are familiar with Bangalore, India, which is the center for IT. Again, why do people invest in Bangalore rather than in Delhi or Bombay or Calcutta or Chennai, which had much bigger centers of population, much more industry? Because Bangalore was a strong research center because of its universities. Again, I think a university system allows you to bring a lot more talented folks with a lot more ideas. The more ideas there are, the more choices VCs have to invest capital. Because at the end of the day, this is just a pure numbers game. How many graduates are you churning out? Those people come up with a lot of ideas, and then VCs have a choice. If you take a look at the total number of deals offered here versus the Bay Area versus Seattle, there's a lot less. I think we offer maybe about 1/10 of the deals that are available for funding in Seattle and Washington. And again, that's because they've got a much bigger university system. We are looking to correct that. And I think a big problem is we all see this, but we're all looking for short, quick-term fixes. Creating a university system takes a while. Washington decided about 20 years ago, I believe, to really strengthen the University of Washington, and it's paying off now. It's been paying off in the past 10, 15 years. This is a long 20, 30-year-old commitment we need to make. But all of us, we're all looking for the short, quick fixes. And so we're just trying to look at capital, but we're really ignoring the underlying cause, I believe, of why we don't have that many lucrative exits, why we don't have that many VCs here. We're trying to change that. As part of the OGA, what we're trying to do is fund VCs. We looked at funding. We want to keep the money in Oregon, so we looked at funding venture capitalists in the state. There weren't that many to choose from because at the end of the day, we still have a fiduciary responsibility. We need to provide returns as well. So we are looking to fund VCs outside of Oregon, and we are doing that with the caveat that the money the state invests in that has to be deployed in the state of Oregon. And that is happening. I'm happy to say we are seeing a lot more interest from VCs coming and pitching away and investing in Oregon. There have been several deals in the past year or so which have been based because of OGA funding and also because good deals were available in Oregon and the money had to be deployed in Oregon. 2 other myths of VCs that I would like to challenge. One is that you need a lot of money to start a business. It's not true. I believe a lot of venture capitalists, and I'd love to hear the panel talk about this more. I believe a lot of venture capitalists are also going lower down. They're not necessarily looking to fund just the $5, $10 million deals. They're also, venture capitalists are funding initial deals in the $1 million, $2 million range. And you don't need a lot of money to start a business, especially a technology company today. It's not like 15 years ago. When you take a look at some of the most successful tech companies, Microsoft, you take Apple, eBay, Cisco, they all raised less than $10 million in capital. So there definitely is an opportunity over here. The other one is VCs don't invest in Oregon because we're too far from the Bay Area or Seattle. Again, that's not true. Like I said, look at Texas. They're far from the Bay Area, Seattle, and Massachusetts, but they do get a lot of dollars. Good ideas always attract dollars. In a global economy, people will invest. People will chase good ideas. Private equity, they invest traditionally in more mature companies. My experience was, once I got past the $5 million revenue range, and they're moving down to, again, depends on the type of private equity company you're talking about. Some will invest in much bigger deals, but there are some who invest in smaller deals as well. Once I got past the $5 million mark in revenue and was profitable, we had a lot of interest. We had a lot of interest from private equity groups. They're usually sector agnostic, so they're not necessarily just focused on technology. So there are opportunities for folks who are not in the technology industry to talk to private equity companies as long as you're a mature business and are profitable. Their interests are usually aligned with yours, and there's also the opportunity for the owner or the founder to take some money off the table, which is good. And they actively assist you in running the business. We have sold to a private equity group. Last year, like I said, it's Oak Hill Capital. Ironically enough, some of the fund investors in Oak Hill Capital was the Oregon Public Employee Retirement Fund and the Oregon Common School Funds were investors in that. So in my case, it was good that the money came from and stayed in Oregon. So we got investment from Oregon, and we all Oregon-based as well. I'm running a little short on time, so I'm going to hurry this up. Alternative financing options. There are some, and again, I'll let the panel talk about this. A mezzanine or debt financing is an option where it's a slightly higher rate of interest, and there could be some warrants issued for this, so which means basically giving up some equity if things don't turn out too well. Receivables factoring, where you can raise money based on your receivables. There are companies which do that. And my favorite one, frankly, is customer funded. Getting customers to fund your growth is always a good thing, because then you know that you've got true value for your business. This happened in our case as well. We were working with a really big customer of ours who wanted to license our technology, and we did that licensing deal with them where we ended up raising several $1 million, where they ended up basically giving us several $1 million, pre-funding us, if you will. And that helped us grow our business as well. One thing to be careful about this is don't sign any exclusives. However small your company is, never sign an exclusive with anybody, because you want to keep all your options open. But again, customer funding is a great way. Given all the above options, that would be my number one preference, because at that point, you preserve your independence, you preserve all your equity, and you know that you've actually created true value. The current funding climate in Oregon, just to touch base, this is some stats from Linda Navarro, who was the president of the Oregon Bankers Association. In 2010, there were almost $2.8 billion in loans made by banks to small businesses. And about 17,000 of those loans were less than $50,000 each. Now, I don't know what the assets were behind that, but so there definitely is money there. Venture funding, 2011, we started slow, but like Jim mentioned, there is a buzz today. There's a lot of activity happening. In the first half, there was about $75 million raised by Oregon companies. And just since June 1st, I believe, there's been over $133 million raised in Oregon. A big chunk of the 133 was one company. I think ClearEdge raised about 73 million, but the remaining 60 million in the past, I believe since mid-July, there's been about $60 million raised by about 8 companies in Oregon. And a lot of that money came from out of state. It was out-of-town VCs investing in Oregon companies. And that's what I mean. Good ideas will always find capital. Private equity, there's activity here as well. In Oregon, recent examples, FEI was one, Solar Power, Stumptown, Geldwen, they've all had private equity investment lately. And then angel funding, there really is a very strong buzz. I get that impression from talking to Jim. It's happening here in Portland. Definitely, there's a very strong buzz. There's a lot of activity. There's a lot of entrepreneurial activity. And again, it's all the hard work being done by all these angel groups. It takes time, but it's all beginning to pay off now, I believe. So I'm very, very bullish on the way the funding climate's headed.